All
right,
Skyline.
what's up, guys? We're back
Hey, fellas.
for another live stream. Got the whole team this week. I think
Yeah,
it's been a
I'm on
little while
price this
since we
time.
got the whole squad, but good to have you guys back.
Hey, bro. Well,
What's
10 mil, boys.
yeah? Congratulations,
Woo.
10
We need some.
mil.
We need some confetti, and yes,
I'm
basically.
trying to figure out how you do the confetti in this.
What a grind! Like we started the trust in 2023,
Mhm.
and July 2026. Pretty much what 99% retail investors
Mhm.
ish.
Yeah.
So what a grind! $10 million now deployed into Southwestern Ontario real estate. Thank you all. Definitely, that's a lot of friends and family and connections, and then the Facebook ads, etc., has been the last year and a half to where we're at now.
Yeah.
But guys, do you remember? Was it the multifamily conference we did the booth?
Yeah.
And I think that we had just launched, right? Pretty much, maybe like 2 months.
I think we were pre-launch. I think we were like pre-launch, or like we had just launched.
Pre-launched?
It was like 2 weeks in.
So we're down Toronto. This was in Toronto, big conference. Who was the headliner? Was it Cardone?
Yeah, Cardone was the headliner.
Yeah. So I remember people were like, "Are you gonna go watch Cardone?" I'm like, "Nah, you can come watch me." And we're sitting at the booth talking to people, and raising capital day one, pretty much. Crazy where we're at now.
Toughest times in history to launch a fund, and safe to say we played the game on hard mode, and we've gotten this far. Imagine when things open up, I think the growth is going to be just hyper growth after that point. So, again, thanks to our existing investors for trusting us, and we got a lot of exciting times ahead as well.
It's a really good point, PV. Like we launched in like the hardest time to launch a trust. But I was talking to a real estate agent yesterday. He's been doing real estate for 30 years. And I'm like, hey, how many times have you seen this cycle? And he's like 5-6 times. So, we've seen it in the real estate side, but this is our first time as a trust starting on the down. So it's just interesting.
It's been super interesting. And I think the coolest part has also been that we've been evolving throughout all of it as well, right? Like, we've been doing this for a while, but people want to see, audited financials, multiple years of that. And so we're now kind of crossing that hurdle where I think we're like this, and it's going to start going like this very quickly.
Because I told you that 10 mil is going to be 20 mil, 20 mil is going to be 30 mil before we know it. Obviously, the first 10 was the hard. It's like that old meme or whatever, where it's like your first 100K is your hardest, and then it's a lot easier, right? Like when you're 20 years old.
I think a lot of conversations from before where we're like, hey, do you want to get your 1K or 10K in now?
Dude, we grinded 1Ks. I was like, why are you not signing the subscription at 1K? Guys, like, is my 1K safe? I'm like, you're safe.
Now the conversations have positively turned towards, hey, I got 250,000, 500,000, that kind of mark. And so it's a very much of a snowball effect. And I think it's because, it was the hardest time to raise capital, but a lot of real estate asset managers didn't perform. And we were able to shine throughout, show our grit at, managing the properties, being able to get turnovers, being able to push the values up, generating that return, and constantly evolving, right? And we didn't just hire a bunch of staff and then just say, we're going to the Bahamas or, going on a yacht in Europe. We work the assets, and that's kind of what's allowed us to.
You guys don't have a Lamborghini in your driveway yet?
No? Okay. No. Right. I might be getting a bicycle though, and being a BRT guy
in a bus path.
Solidarity with our future tenants.
Nice.
Well, Mitt, you saw that email that came in through investor relations about the guy that had the hypothetical about.
So yesterday, actually, that's what I wanted to cover in this as well. So yesterday, we got a question from our investors saying, like, hey, if you guys sell, do we have a chance to redeem out? And I was like, sell? So I think his question obviously was, were we going to sell the management company like Foundation Asset Management, Foundation Property Management? And if one of those things were to ever happen, that's a material change in our business. And legally, and always, like, investors are disclosed about it, and then they're actually allowed to redeem because the business is materially changing. So when you have a publicly traded company, that's where shareholders vote on stuff, and they have a long period of closing and timeline to be able to redeem out, or they choose to roll forward. Part of any sort of sale process that would occur would have multiple engagements with our stakeholders, from our investors to all other kind of partners involved. Because even if we were to sell the management companies and stuff like that, all our lenders would have to kind of approve or be on board with it as well. Because again, guys, we as the trustees of Foundation Capital Private Real Estate Trust guarantee all the loans. We're on title for everything. We're basically give up our whole lives for these assets. And it's obviously tough because for that individual, they were invested in another REIT, and I guess they halted distributions. They weren't communicating. They weren't sending any messages or anything like that. And I think the frank reality is, like, you're seeing us here on this platform here. You can get us through email, Instagram, text, etc. We're pretty responsive. Obviously, we've been on the road a lot more, being a lot more active in our activities. But we do get back to you, and we are continuing to push the properties forward. All in all, I don't think we're planning to sell anytime soon, or I don't think we're planning to sell. If anything, you'll see us going public in 5, 10 plus years kind of thing, depending on the trajectory of how our business is going. So we're kind of here for the long term. I think a lot of our, I want to say, like, let's call it more than half the REIT is probably the top 25 investors. The top 25 investors know what we're planning, what we're executing, and the fact that we're buying these assets that are, need that work, tender love, and care. And you guys all know the fun that happens with us dealing with municipalities and the OLT and trying to make all this happen isn't fun. We recently had some backlash from folks who don't understand, right? A lot of people speculate. A lot of people think there's nefariousness involved, when all we're doing really is understanding the market. So when we first launched back in 2023, we were like, we're buying existing, we're rehabbing it, and we're going to rent it at market rent. Over the evolution of Foundation Capital Private Real Estate Trust, we've come to understand, people can't afford the market. People can't afford $1,800 in rent or more. That's become the most difficult part. And the three of us kind of came together and really realized over the last year and a bit that, hey, we need sub $1,500 rents. And that's obviously led to where we're doing a lot of the conversions in our buildings. In London, we've got 12 units to 24 units. We've got 12 units to 20 units in Chatham, another 22 to 42 in Chatham. And again, part of some of our agreements with the cities and stuff like that are that we are providing some of these units at affordable rates as well. We're obviously looking at leveraging some of the government programs and stuff so that it's a net benefit to the REIT. Creating the units is already a net benefit, but if we can tack on some funding, that's even better. So we adapt and overcome, right? It's a little bit of what our strategy has always been, and we always look to communicate that. And that's obviously what's allowed us to now launch our developments, identifying that this is actually the largest need for most Canadians, and our affordable housing fund to get more developers on board. A lot of people follow the standard of, hey, we've been doing this for 25 years, 30 years, 40 years. We're going to just keep doing it again because we know that's how we do it. Unfortunately, following the old methods does not make sense, or it doesn't make sense for the public, and it doesn't make sense for the investor. The guys who are building luxury, and when we look at all the Southwestern Ontario cities, it's the families who've been doing it forever who are building luxury units, and they don't care because they built it for a long time. They don't care if it's vacant.
I don't know if I told you guys, or Mitt and PV, but Dean was telling me that a construction manager in our area, London area, they have vacancies sitting, but they're still creating the next building.
Yep.
It's just what they know. And they don't
it's what they know, and like depending on what they built it for and like where they got the land and all of that, like they'll leave it vacant, right? So this is where you've got a variety of players in the space, right? You've got really large REITs who offload it to the property managers who live on site and are friends with the tenants, not really pushing the increases, getting the value turnover, which is why those investors see typically a lower return, or they don't want certain backlash. They're not willing to execute strategies to actually solve the problem, which is we've got a lot of Canadians who need that housing. And then you got the smaller guys who get bled out by, the tenants who stop paying, who cause a bunch of damage, and you got to go deal with the landlord tenant board. I digress. I know I'm going a little bit of rant here, but that's really added to how we've thought about growing our business, right?
Yeah. Mm-hmm. Yeah, and I think in very simple terms, it comes down to we've identified that this is a need in the market. Nobody else is building it, and now we're seizing that opportunity to build it, create a yield for our investors, and also add that much needed supply for people who can't afford these rents as is for the higher end product.
And I'm sure, Jeff, you can add, like, you've been having a lot of conversations with different councillors in different cities, and the feedback that you're getting has been.
Mm-hmm. Well, funny. Most of their feedback, it's a new game where I'm starting to call it a game, but like municipal politics. It's they want it to look pretty, so that's like huge on people on councillors' bucket list of like, I approve that beautiful building. Mm-hmm. I try to say affordable housing all the time. It seems very tertiary to them. I don't know. Maybe they don't like running on that. They like just running on it looks pretty. So, but we know deep down that affordable housing is just what the province needs, and the councillors will come and go, and it's going to get approved. And then obviously talking to tenants and what they can afford. I see the $1,800 rent. There's 2 or 3 people living in the same apartment. One of them, if a partner leaves, then they can't afford the rent, that kind of stuff. So we're very bullish, very confident at the baseline. And just like, anytime you're at a restaurant, you talk to the server, like, oh, do you rent? Do you drive? Do you do this? Like, oh, no, my girlfriend and I were in this basement. We just Uber. So it's just like a small little test all the time. I'll even go a little bit James Bondy here. Even the producers would always ask, like, who should be the next Bond? Like they're always surveying the audience, right? Just to hear. And it's kind of what real estate investors do all the time too. It's like, what do you pay for rent? And like, are you in the city? You're just constantly getting new data all the time, even if it's not in an official report. You're kind of like hearing it before it might get to a report. And I went to a downtown office conversion apartments, and it's funny, all the tenants were like, we'll call them 20-year-olds. None of them had a bicycle, even though we're all about bicycles right now. None of them had a bicycle. And then there were storage lockers empty. None of them had storage. So the 20-year-old doesn't really have product anymore, or things like whatever, like coffee cups and things they want to put on their shelf. But the 50, 60, 70-year-olds, they're like, where am I going to do all my stuff, so to speak, right? So it's an interesting shift in dynamic of like, people aren't going to need as much storage in the future. Only the boomers kind of need the storage, so to speak. Everybody else is a little bit more digital. Mm-hmm. And that's kind of the apartments we're creating. And then most of the councillors are like, yeah, right on board. They get it. We're in the rules. This is a big one that kind of came up last night, even internally with us. We're just legally following the rules. Some people don't like that. That's not about us. That's then go vote in the next election, so to speak.
It's funny. It's not even just we're legally following the rules. We don't know, like, we're following whatever the law allows us to do, seeing what's possible, and then having those conversations with tenants once we're approved and we're able to do whatever we're saying we're able to do. What you have, unfortunately, is a municipal election year. So every single municipal councillor in every single city who is, let's say, on the other side of boo landlords is saying, boo landlords, let's go after them so that they get political riding support. Yeah. Which, again, like I was saying earlier, there's a wide range of landlords. You've got the small mom and pops to the big guys, and everybody operates a little differently. So they're not all equal. And it's interesting because you have this conversation, as we do with not-for-profits and other organizations in housing, and you look at the not-for-profit housing, and they're all run differently. You have some that are like slums, and you have others that are really super nice. And it comes down to funding and the capacity of the team and how you operate things. And so when you assess an operator, is all that ultimately matters to the actual end execution. And unfortunately, you can try to go against, like, say, boo landlords and try to punish them and implement all these rules. All you're going to have is less people coming into the space. And then you're going to have aging supply that is never going to be rehabbed because there's not enough capital coming in from your property taxes are going up, your utilities are going up, All your other expenses are going up. But if you're capped with older buildings on rent increases as well. You can't do all the deferred maintenance. And so unfortunately, you start having people living in worse conditions. So if you don't allow landlords to have the ability to be able to make some money so they can reinvest that into their properties, because it's easy to put the landlord as a bad guy. You'll just then deter people from doing it. And then you'll have a housing issue where now the government's building housing. And we've all seen internally, as we're looking at different projects that have been built by municipalities, is that they're typically run over budget or they have shortfalls, right? Like they can't afford the CapEx themselves either afterwards. And then they're like, oh, we need to make a request to the council to give us more money. And it's like, wait, shouldn't you be running it in a sustainable manner? And so it's a matter of trying to find balance in the market between all the players. And I think we've been doing a pretty good job making sure that we can meet the social needs of society, of providing that affordable housing while still being able to do it at scale by providing a return to investors and repeating that.
I think a lot of the feedback is coming from people who wouldn't be a tenant in the building anyways. Like they already own a home, they have three cars and multiple parking spots, and they're saying, hey, there's no parking. Meanwhile, the people with disabilities who are on ODSP that we want to house in here, many of them might not even be able to drive, let alone be able to afford a car and have insurance. But these guys are the ones coming and making a fuss online. So you got to understand who we're building this for and the types of tenants that we are trying to place, at least on the deeply affordable side. And then on the affordable side, yes, there may be people who are just regular nurses, core workforce housing, people that may have a car, or they're going to get comfortable using the bus and adopting the province's $500 million investment. So there's, and even if you're one of those people, maybe you're okay giving up your car and taking the bus so you can live cheaply for rent wise and have more disposable income to live a better life. So there's a trade-off, right?
Yeah, more disposable income going right back to the municipalities. It's not really talked about. It's hard to show them, but it will be, right? If they're not maxed out on their rent and trying to buy groceries and can't even do anything else. And then one thing I thought about, it's going to also be hard to articulate, but they're talking about if there's minimal parking, it's going to spill into the neighborhoods. Well, how many of those financial books or videos, it'd be like, rent out a spot on your driveway for extra bucks. And we're not getting any of that money, So.
No, definitely. I think it's a lot of people are used to how they've done things, and it's a little bit of change management and change understanding. They're not even adapting to the current times. Like the frank reality is, Canadians are becoming the poorer Canadians are getting poorer or don't have access to capital. We're giving them these units that are going to allow them to save money, be able to make investments, so that they're going to be okay. A lot of the guys who are on government supports, pretty much right now, if you rent a market unit, you can't afford to eat. So, they're going to food banks and stuff. Guess what? If you get one of our units, you don't have to do that. You're going to have money left over so you can actually go buy food, do things, travel, all that kind of stuff. So unless you build those kind of solutions or you have a better answer, it's quite tough. And so that's how we're dynamically looking at the market. And I think because of how dynamic we are in our execution and implementation of all these things, and it isn't just, okay, we're building luxury or making luxury units, or we just touched it up and did the minimal reno possible to get the top rent possible. We're going to have that sustained demand and growth. I think we've seen quite a bit in London where our vacancy is very low. And our demand, what we're seeing from the tenants that are applying in all markets, is that if it's sub 1,500, there's 100% wait list that we have, right? Like anything that we can provide will get filled within I don't want to say seconds, but probably, right? We have relationships with the different not-for-profits in each of these areas that help with housing and affordability that some of these councils don't even interact with either. So
the beauty for our dev investors, these are our rent projections right now in 2026, but for the developments, they're going to be finished in 2030. Yeah. And I think the CMHC reports just came out where rent's going up 2% in London, Ontario, right? So quick backstory. student rentals. They used to rent when I bought in 2012 for like $400 roughly a bedroom. Now it's $800 a bedroom. So you can just see how we're being very conservative in our rent pricing right now in 2026, only for it to be more confident in 2030.
Well, that's 800 if you come in with your buddies and you rent the house entirely together plus utilities.
That's per room.
But if you were to rent just room to room, you're looking at $1,000 or more, right?
Yeah, and there's not even those options out there. I started looking on Kijiji last night to see, can I get anything sub $1,000, my own apartment? And it's like tough, and it's all like you get a room, so it's all like people trying to rent the rooms.
Yeah, I mean, we've looked in Chatham. We saw, oh, you want to share a random bedroom in a house with me? $1,200. And it's like, you want to be living with a random? You know,
economics is caught up to real estate here and yeah, it is what it is, right?
For sure.
And you know, certain people will have a victim mentality, but it's, how many extra jobs do we have growing up and to make it work, right? Rather than just like, oh, you know, this sucks, you know? So there's a little bit of life coaching that has to happen for everybody, but
yeah.
That's a very good point, Jeff. Sorry, PV, go ahead.
I was just gonna say, like, I feel like anytime big changes happen, it's been met with friction like this. Like, remember when Uber first came around and there was all the people taxis that were against that, or even self-driving. Anytime
Airbnb.
Yeah, but eventually, once that adoption period is over, people really see the benefits and are focused on how much of an impact it makes. So we're just gonna have to navigate that and get to the finish line.
What do they say? Like down payment for a house used to be like just a money issue, but now it's like a family tree issue, so to speak. Like you're, you know, it's not easy. So you gotta grind. You gotta find another way to do it. You know, how we succeeded when we were 20 is different than the current 20-year-olds, and it just continues to evolve, right?
There's always a way.
There's always a way.
Yeah. Awesome. Yeah. So thanks, guys. We appreciate all your support on this road to 10 million. Now join us on the road to 100 million. Probably give you an update at 20 million, but let's see if we can make it by the end of this year. That'd be amazing.
Family offices, reach out.
Yeah. At the end of the day, I think why people believe us, support us again, is our active communication here, but also for the fact that we do what we're saying we're going to do. We're executing. We're just not sitting behind a desk, not doing anything. So if you're looking for active operators who are executing, generating returns, hit us up, scan the QR code, go to Ecovesto, make a profile, get invested. Thanks for your support.
All right. See you guys.